Home sales and home prices have been improving for several weeks. Unfortunately, this period could be fleeting because we had strong economic news last week. And ironically, a really strong employment situation in the country actually drives the bond market to higher rates. So after the recent lows with mortgage rates, this week the 30-year fixed rate jumped back up over 6.5%. We can already hear that the few weeks of September refinance boomlet has backed off. The purchase market is slower to respond, and the data now is still showing the positive impact of lower mortgage rates of recent weeks. Mortgage rates bounced back up over the last couple of days, and it demonstrates how fragile this housing market recovery could be. The fact is that mortgage rates fell closer to 6%, home prices and home sales have been pretty obviously showing gains over last year. The leading indicators like price reductions have topped out. Even the withdrawal rate of frustrated home sellers declined over the last month. Last year was really low in terms of home sales. There were very few buyers in the fourth quarter last year, so having more sales now isn't like a big accomplishment, but it shows that consumers do in fact get a little more motivated as the cost of money gets a little cheaper. And conversely, if mortgages don't stay cheaper, we've seen home buyers very willing to wait. The conventional wisdom is that mortgages will generally move lower, but there's no reason that must be true, as evidenced in the last few days. Right? That's why we do this work each week. And by the way, this Thursday, October 10, we'll have our monthly webinar where we spend an hour with the data. In many ways, we could finally be at a transition point of sales recovery, but that's not guaranteed. And so we want to dive into all the details. We're going to really focus on two things. First, the key indicators of what to watch if this recovery has legs, and which will turn first if home buyers slow down again. So we'll cover also all the local markets, some of which are up, some of which are looking very weak still. These webinars are limited to 1,000 attendees, but you can still reserve your spot now. So click the description. There's a link in the description below to reserve your spot. It's this Thursday, 10 a.m. Pacific for the Altos webinar. At Altos Research every week, we track every home for sale in the country. All the prices, all the supply and demand, all the sales, all the changes in that data, so that you can understand the changes in the U.S. housing market immediately as they happen. I'm Mike Simonsen. I'm the founder of Altos Research, and it's now the fourth quarter of 2024. Are the green shoots of sales recovery going to wither away after only a few weeks? Let's look at this week's data. Let's start this week with home sales. There were 61,000 new contracts pending for single-family home sales this week. That's down a bit from last week, but almost 6% more sales than a year ago. There were another 12,000 condo sales that started this week too. This is now the second week in a row where home sales are coming in greater than either of the last 2 years. Those 2 years were very slow in sales, and like I said, a little growth over last year isn't like a big accomplishment, but it does illustrate how consumers are reacting to cheaper money. So in this chart of the newly pending home sales each week, see this year's dark line is now above each of the last 2 years. And in 2022, that light red line here, you can see how quickly home buyers hit the brakes as mortgage rates surprised again in September and October of that year. This year, we've had a great trend of declining mortgage rates, but that strong economy data drove rates higher in the last few days, like really spiked them. So that's why I'm worried about the durability of any sales recovery we've seen. Home buyers are not afraid to wait. Now, at the same time, home prices have been holding up better than I expected for much of the year. And this week continued that trend. Home prices have moved up for 4 weeks in a row, and I did not anticipate this strength. So we're looking here at the prices for the newly pending home sales each week. So the homes going into contract. See the dark red line here at the top of the chart? So this is the median price of the homes that people are buying, those that went into contract this week. It's $395,000 now. And like I said, It surprised me that 4 weeks in a row now, this measure of home prices has ticked up. In general, one would expect home prices to ease down in the fall. These are new pendings prices. They rose by 1.25% this week to 395. They are 5% greater than a year ago. The new pendings prices have been hovering 3 to 5% greater than last year. So this is now the upper end of the range after a month of slightly improving homebuyer demand. In the last 2 years, when October had sharply higher mortgage rates, home sales were tanking and prices were dropping too. And I've highlighted here in gray the times in the last 2 years when home prices plunged. Home prices dropped 7% in October 2022. The opposite is happening now. And this, it's pretty stark in this view here. Now, I don't expect this trend to continue. Home prices are not skyrocketing through the winter. It is, after all, autumn, but this is a stronger signal than I expected for the resilience of the home buyer. This is the price point that people are buying. And this recent trend implies that the yearly home price appreciation has a little more room than I've been expecting all year. So it's a reflection of the fact that as rates fell finally closer to 6%, home prices were supported, but then suddenly they jumped again. So we're going to see how quickly that reverses this pricing trend. The median price of all the homes on the market, all the actives, is now $440,000. That's unchanged from last year, 0% gains. So where the new pendings price is up 5% over last year, the asking prices are unchanged. So that creates an overall picture of home prices with a 0 to 5% appreciation window. I've been assuming that the year would finish closer to the 0% appreciation over 2023, but now I'm leaning closer to 3 to 5% gains because we can see this trend here. There's still a lot of variables to play out before the end of the year, though. The available inventory of unsold homes on the market ticked up to 734,000 single-family homes this week. That's up 0.5% for the week, or just under 0.5% for the week, and is 36.7% more homes on the market now than a year ago. Inventory looks like it probably has 3 more weeks of growth through the end of the month. Inventory grew by less than 0.5% this week, right? So nationally, it seems to be approaching a seasonal peak. If mortgage rates keep climbing from like 6.1 to 6.5 to 6.6 where they are today, or closer to 7%, then that will slow demand and it'll drive inventory higher for longer. As the last 2 years have shown, rising rates late in the year can drive inventory higher all the way to the end of November. Some of the Sun Belt states like Arizona, Texas, Florida haven't topped out inventory yet. Texas has 44% more homes on the market than last year and 24% more unsold homes on the market now than in 2019. Texas has 24% more homes now than pre-pandemic. Arizona has 70% more homes on the market now than a year ago. Nationally, so we're up 37% more homes unsold than a year ago, but we're still 23% fewer than 2019. There are 8 states with more inventory than 2019, but most of the country is still fewer unsold homes on the market, right? So we're going to cover this in detail on the Thursday webinar about which states and which trends are moving. So in this chart, you can see that inventory is slowly reaching the pre-pandemic levels across the country. And you can see how quickly inventory can climb late in the year with spiking mortgage rates. See the red line from last year, that started growing again in September and didn't stop until the end of November. When rates rose, inventory rose along with it. There were 61,000 new listings unsold this week, which is down a few percent for the week and a few percent more than a year ago. So with only 8,500 new listings, the immediate sales was actually slightly fewer total sellers than a year ago. The immediate sales are at their lowest level since we started tracking during the pandemic. So these are the bidding war homes and the homes that get offers immediately after listing. These are the best homes and the best locations that are properly priced and well marketed. So there are always some immediate sales, but it's notable to me that while we're measuring a slight pickup in total sales and demand, the prices being paid are holding firm, the urgency of buyers is not increasing. Home buyers are in a much stronger position than they have been in many years, and it shows in our immediate sales data. Now, I use this new listings data each week to watch for any emerging imbalance between supply and demand. There are a lot of potential home buyers out there who assume that a flood of inventory is coming, that home prices will tank as a result. And so if we are going to see a flood of sellers, that dark line here is going to have to climb. There's no sign of that happening yet, but that's what we're watching for each week. So this week's 61,000 new listings is still 10 to 20% fewer sellers than normal times, pre-pandemic. And let's close with price reductions today. Just about 40% of the homes on the market have taken a price reduction from the original list price. This percentage has been staying flat for a couple of months now. One way to measure the slight improvement in homebuyer demand over the last month is that price reductions haven't climbed at all. In the late season, there are a lot of withdrawals, so homes that haven't gotten their offer have two options. They can either take a price cut or they can withdraw the listing. At the end of August, we were measuring withdrawals at their highest level that we've seen in a long while. But since then, that ratio has declined a bit. And I mentioned at the top of the video, as rates fell closer to 6%, the price cuts leveled off, withdrawals slowed, the new pending sales picked up, and prices ticked up. But now suddenly in the last few days, mortgage rates jumped again, which could put a damper on all those trends. Rates spiked, remember, in the autumn of 2022 and 23. And at that time, the pace of withdrawals accelerated. Price cuts climbed too, and you can see that here in the red line. And in 2022, we transitioned from that pandemic boom to the post-pandemic era. And so now it really illustrates for us how fleeting any recovery can be. And it's wild, right, how quickly the sentiment can change in a week. We were maybe at a transition point to get some home sales growth, and then suddenly we had this really big spike in mortgage rates. So buyers can put the brakes on very quickly, and it can be impactful for smart decision making. Home buyers and sellers need to hear the data directly from you so they know how to act. You should join us at Altos Research. Go to altosresearch.com to book a free consult with our team. We'll help you know how to talk about the data and the market with your clients and prospects today. There's a link in the description below to join us. Click that and let's get started.